Yesterday, I panicked. Gold pushed 2000 US. I don't know what it is in Canadian, in the loonie, but I think next stop is 5,000 for gold. And
Okay.
it may take another 5 years, but I think uh, this here is a real gold coin. And
Mm,
the first one I ever bought was in 1972. I bought it in Hong Kong and I paid $50 for this. And today it's $2,000 plus, 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 plus.
mm,
And this also is a silver coin. This is real silver. I don't like fake money. And that's why this Vancouver Resource Investment Conference is important because you come to hear about why, if you don't have gold, I mean, physical gold and silver, you should have some now. So, welcome to the program, Jay.
I'm happy to be here, Robert. Looking forward to this.
How long have you been doing the VRIC?
The show itself is over 20 years at this point, 27 years, and I've been running it for the last 12 years. And so, as you know, the bulk of those 12 years have been a pretty bearish market for precious metals and a couple of false starts along the way. Um, and what I'm seeing today is what you're seeing. I think a lot of individuals are realizing they might be getting caught a bit flat-footed by having zero exposure to historic money. But I feel a bit of a mission, like I feel driven at this conference, Robert, honestly, to communicate the importance of that, especially to people in the West, because as you know, culturally in the West, we're sold this story that gold is a pet rock, that it delivers no yield, it has no value, etc. And we hear this from people like the Oracle of Omaha, for example, right? Gold's a pet rock. Whereas a lot of countries in the East, people are encouraged, civilians are encouraged to buy gold jewelry, to store wealth in gold. And we're sold an opposite story in the West, and I think it's going to catch a lot of people flat-footed.
But also, is the thing, give an idea is that, again, I bought my first coin in 1972. I was a pilot in Vietnam and I had to fly behind enemy lines. The reason to fly behind enemy lines was at one time it was not, at one time, this gold mine was in US hands, but
Right.
the North Vietnamese army rolled south so fast that the mine was now in enemy hands. And Nixon had just taken the dollar off the gold standard August 15th, 1971. And I was pussyfooting around. I said, I have time. I'll go buy some gold from this
Mm,
mine. And the next thing you know, the North Vietnamese army rolled south, and this mine is now in enemy territory. So I thought if I flew behind enemy lines, I might get a discount from the gold dealer. And what she was is a little tiny Vietnamese woman with red teeth. And I go walking up to her, and she wanted $50 for a piece of gold. And I said, 50. You're behind enemy lines. I'll give you 40. And she goes, spot. I said, what does spot mean? Do I have a spot on my shirt or something? Spot.
mm.
And all of a sudden, this little Vietnamese woman educated me. My lights went on. Gold and silver are God's money. They're put here on planet Earth. They're not manufactured out of trees called paper. And
Mm.
so this woman's yelling spot at me. And I realized in that moment why Nixon taking the dollar off the gold standard in 1971 was so important. He just blew the whole global economy into this bubble, which is that hot air balloon, little gondola beneath it. And right now, I think the end is near.
Mm.
So that's why when we come back, we're going to be talking more about why I'm so excited. I love going to the VRIC, the Vancouver Resource Investor Conference, because I go there to learn. You got thousands of people. You've sold more tickets this year than ever before. And the interest in precious metals is increasing because people can see that gondola is losing air right now. And my generation, we're the first generation with what we call a 401k. In Canada, it's called an RRSP. But basically, exactly as Jay says, you're putting your future retirement in the hands of somebody else. And our central banks are printing that. That's what just happened in England, right? They had to reverse and start printing again because their pensions were going broke. So this whole thing goes back to my generation. This who stole my pension. is that my generation, the boomer generation, is the first one that's dependent upon the stock market for their retirement. Up to then, if I worked for Ford Motor Company was in charge of my retirement. But what happened in 1974, corporate America and corporations all over the world, so we don't want to handle the retirement of old guys, the boomers.
Mm.
So we're going to put it in the hands of the boomer themselves. But the trouble is, my generation has no financial education. Neither does yours really either. And
Agreed.
they started saving money. The government prints it. They save stocks, bonds, and mutual funds. And as every time they raise interest rates, the stock market crashes. So that's why when we come back, I'd like to have you discuss why I'm so excited about going to VRIC, on January 29th and 30th. What will you learn? Who will be there? If you're going to listen to me, you listen to me on Zoom. I don't want to listen to myself any longer. So I want to come and hear the other speakers and what they have to say and hopefully scare the crap out of you because you'll take action. If you knew how close we are, instead of a Lehman Brothers moment, we're going to have a pension moment, which came out it started in 1974. All these pension stuff started to happen. Then you might want to attend the VRIC and get educated and talk to people who are really in the industry. So we come back, we'll be talking again, once again to Jay Martin. He's the president and CEO of Cambridge House, and he puts on the very prestigious Vancouver Resource Investment Conference. So that's one of the biggest lessons that if you could listen to what the fundamentals are, is start small. And as Kenny knows, Kim is a far better real estate investor than me because she has the management experience. And management of property is the management of people.
The truth is, if you have a manager managing a 10-unit building, you also have a manager managing a 200-unit building. So the difference between a manager that's going to accept a 10-unit building and a 200-unit building is experience and wisdom and somebody that really understands the business. And so when you start buying bigger properties, what happens is you attract better people and they make more money and you pay them more money.
But a lot of people are lazy.
Because most people believe that they have to have the capital raise or they need to have, come from a rich family. And those are literally excuses. The biggest issue that we all have right now, and most of the people that we associate with, are deals.
And so that's what gets most new real estate investors in trouble, is they don't know how to manage the property. And there's a lot of legal stuff to it.
Well, yeah. So here's what I see. One of the biggest mistakes is people look at it like a stock or a stock market, or just, they invest their money and then they walk away. Like all of a sudden, magically, these great tenants are going to show up and you're going to be, getting 3 bids for the landscaping and the painting and the cleaning and all the things and the utilities and looking at all the bills and all that stuff. They just think that just happens.
The ABCs of real estate and property management, which is the key to real estate. You can't manage property, get out. And number 3 is the advanced guide to the finance of real estate. And what Kenny has always said, the key to real estate is jobs. And this time, not only interest rates came down after 2008, interest rates are going up this time in 2023. And we're going to have massive unemployment. You look at Meta or Facebook, they're laying off thousands and thousands and thousands of workers. So it's not only interest rates going this way, it's unemployment going this way too. And would you agree with that, Kenny? If you don't have jobs, that crushes real estate.
Yeah, I always tell people, real estate exists for people, period. You have to have people for it to work. It doesn't really matter what it is, an office building, retail, shopping center, apartments, houses. If there's no people and they can't afford it, then, real estate's going to suffer. And that's where we're heading next.
So when they dropped interest rates after 2008, people were flush with cash because they could afford to flip and do all those goofy things. Then they could afford to go shopping. One of my favorite subjects is shopping centers. I think they're going to be turned into apartment houses eventually, because if he keeps crushing retail, plus restaurants, plus his commercial,